Are you interested in the high growth ride sharing sector? Well, then stick around, I'll analyze it for you in this video. Hey guys, welcome to my channel, Investing Untangled. Hope you're all doing well. On this channel, I post videos about stock market research, detailed stock and business analysis, and I also post educational videos about stock market investment. And if this is something that interests you, then hit the subscribe button and follow my content here. In this video, I'll take a deep dive into the high growth ride sharing sector. I'll show you what the big players are, which companies are the most dominant in the world, and which companies are most probably going to be the biggest winners in this sector. I'll also discuss what the competition in this sector looks like and what kind of headwinds the sector is facing in general and what you can expect going forward. The most dominant player in this sector is Uber, and they recently announced their earnings, so I'll also discuss their recent business performance, and I'll also check Lyft, which is a very strong competitor of Uber. And finally, we'll also analyze if it makes sense to invest in this sector and what the valuations of the companies that work in this sector look like right now. This is going to be a highly value-packed video for you, and in return, if you can hit the like button, that'll help my channel a lot. So without further ado, let's get started now. This ride-sharing market does have actually a lot of growth in it, and you can see here it is estimated that by 2025 this industry will be a $218 billion industry, and it is estimated to grow from 2018 onwards at a compounded annual growth rate of almost 20%. And here you can see which geographies actually will drive this growth, and you see that Asian markets will be strong drivers of this growth. So pretty much everything from e-commerce to ride-sharing businesses to EV sector, Asian markets are the dominant drivers of this growth in pretty much all these sectors. Now let's look at which are the most dominant players in this sector. These four companies, Uber, Lyft, Grab, and Didi Chuxing, are the major players in this sector. Uber and Lyft are already public companies, while Grab and Didi are private companies, and Grab and Didi operate predominantly in the Asian markets. Didi actually has started expanding into Mexico and Australia. And Uber is the biggest player in this sector. It operates in 65 countries and more than 600 cities now. Lyft is a smaller scale company. It operates only in North American markets, predominantly in the US, and a few cities in Canada. And what is interesting is actually the number of users. For Uber, it's 75 million, while for Didi, it's 550 million. And here also rides per day, 14 million for Uber, while it is 30 million for Didi. But if you compare revenues, Uber is much higher, it's 65 billion versus Didi at 11 billion. So even though Didi has way higher users and way more drivers, it earns less revenues because it predominantly operates in Asian markets where the costs are lower. And since Uber also operates in North America and Europe, it can make actually more revenues. And Uber actually owns stakes in multiple different companies, all the way from Yandex, which is a ride-hailing company in Russia. It owns 37% share and 19% stake in Grab and a 15% stake in Didi. So clearly Uber is the most dominant player in this field. Now, if you compare Lyft, which is a very close competitor of Uber in North America, you will see that Lyft is a much smaller company. It is right now a $17 billion market cap. Here, if you look at Uber now, it is a $117 billion market cap. And Uber also just announced its earnings, and they made $11 billion in 2020. I'll go into all those numbers in a minute. So in this sense, comparing all these companies, I like Uber the most just because it is the most dominant player and it is actually diversifying into different sectors. I'll show you those examples just now. Lyft is predominantly focused on ride-hailing and ride-sharing market, and it is only operative in North America, predominantly in the US. So it doesn't have that the massive scale that Uber has covering different geographies. And Uber actually has started to focus more on its core businesses now. They have started to divest many arms of their business. For example, they recently sold their self-driving unit to Aurora, which is a startup focused on self-driving technology. And here you see Uber actually claims now 26% stake in this company. Now, if we look at Uber as a business and take a look at their financials, here is the income statement of Uber covering the last few years. Here you see that they've had a straight up growth in the top line from $4 billion in 2016 they stood at $14 billion in 2019 in terms of revenues. And here, if you look at the total shareholders' equity across different years, you see that the equity also has been going up from $3.6 billion in 2017. It stood at $14 billion in 2019. So across these past years, Uber has seen a significant rise in its revenues and also in its equity. Now we'll take a look at their current business performance. Because of this economic turmoil, this sector has been hit very hard. So let's take a look at their numbers now. So here we are looking at the numbers from the year 2020 now, because all the numbers from all the quarters have come out now. So here you can see that from $13 billion in 2019, Uber registered a 14% decline in revenues to 11 billion now. And this has been primarily because of their rides business, which they call the mobility business. And here you can see mobility adjusted EBITDA went down significantly. It went down 44%. But what has been very promising for Uber is that their delivery business, Uber Eats business, has taken off massively. It registered an increase of 36% from a loss of $1.3 billion to a loss of $873 billion in adjusted EBITDA. EBITDA is earnings before interest, tax, depreciation, and amortization. So basically earnings before all these expenses are paid off. So looking at their balance sheet now, you see that their total assets went down in 2020 to $9.8 billion from almost $14 billion. And that was because their cash reserves went down. They probably had to spend a lot of money to keep themselves afloat. So for the total assets, they do actually show an increase from 31 billion to 33 billion for 2020. But there is a problem here. What I saw is that intangible assets and goodwill make a huge proportion of it. So you can see 1.5 billion and 6 billion of just intangibles and goodwill in their 33 billion of assets, which I don't like. And in my opinion, I would just take these two off, and that would make their total assets basically go down from where they were in 2019. I did a video on explaining why intangible assets and goodwill are actually not real assets, and you can check that out. I'm leaving the link of that in the description below. Okay, moving on, let's check their income statement now. And here you can see that they have seen a hit on their revenues. From 13 billion, they went down to 11 billion. And this is understandable given all this economic turmoil that is basically hitting this sector very hard across the entire globe. But this is actually nice to see that the company has started reducing its expenses massively, and the total cost and expenses has gone down to 16 billion from 21.5 billion, meaning that the management is doing a good job at preserving cash and preserving assets by reducing their expenses. And because of this, you can see here that their earnings per share has improved. So this is still a loss-making company, and I generally look at the diluted EPS, which is actually the same here for Uber, basic and diluted. And from a loss of $6.81, they have gone down to $3.86 loss, which is positive in this sense because it's a negative number, meaning that they have started reducing their losses. So they are slowly moving towards profitability. And talking about profitability, the management is actually doing a good job in cutting the expenses, divesting their other business arms, and focusing their business. And the management here believes that they're still on track to achieving profitability in 2021. So all these companies in this sector are basically loss-making companies. They are not profitable because it's a newer sector. It has a lot of growth going forward. They will become profitable at some point, and Uber already thinks that in this year itself they'll start making progress and be profitable at least at a quarterly level. So here I'll show you some numbers from their most recent investor presentation. So here you can see that they're focusing now their business on mobility, delivery, and freight, and they have divested a bunch of their other businesses, and they're also cutting down on expenses as I showed to you. Their employee headcount has gone down, so they have actually shrunken their business in that sense. They have laid off some people, and their current employee count is at 19,000, and it was at 27,000 at the beginning of 2020. And here you see why Uber is the #1 dominant player in this sector. It operates across so many different regions: US, Canada, Latin America, Europe, Australia, New Zealand, Middle East, and India. And pretty much in all these regions, they have a dominant position, more than 65%. And in India, they share a market share of almost 50%. And in addition to these operations, they also have stakes in these other businesses that operate in Russia, Southeast Asia, and China. The other numbers were their mobility numbers, meaning rides. And this one is now their food delivery. And here you can see they also operate across so many different regions and places where their they're not running their delivery business, they still have ownership stake in big companies in those places. For example, in India, they own 10% of Zomato. In China, Didi and Grab. In Southeast Asia, and Yandex again in Russia, because these businesses are also operating in food delivery, and Uber owns a stake in pretty much all. And here you see how significantly they grew their business across all these years up till 2019. And because of this economic situation in 2020, there was a significant decline in their business, but the numbers have already started looking better now, and it seems that they are on a path to recovery. So shown here are gross bookings, which grew by 50% compounded annually. And two of the major arms of their business right now are the rides business and also the food delivery business. And you see here, Uber is the #1 app that is downloaded across both these sectors. And this shows that they are a major dominant player in both these sectors. Their food delivery business basically massively rose in 2020, which makes sense. A lot of people were staying at home and they were ordering food, so it was not even visible here in 2019. So their rides business did drop quite substantially, but their delivery business expanded quite massively, you can see here. And for mobility, they are the undisputed global leader. They have a 46% market share globally in the rides business and rides hailing and rides sharing business. So in addition to being a dominant player, I showed to you that they have major stakes in other regions, in other companies, the local businesses, and here are all the stakes that they have. So basically, all these regions where they started their businesses but they got really tough competition from local players, they actually sold their business operations. For example, in India, they sold it to a local company called Zomato, and in China, they sold it to Didi, and in return, they actually got equity stake in these businesses. That means a growth in these businesses will be actually profitable also for Uber. So Uber will also grow with these businesses. And what I really like about this business is the way they are innovating right now. They have started to integrate basically all their services in just one platform, and they're offering monthly subscriptions. So for example, for a $25 monthly subscription, you can get savings on every ride, you can get free delivery on Uber Eats, you can have groceries delivered to yourself free of cost, and you can also get priority support. So clearly Uber is the most dominant player here in this business. Lyft is limited. They just rely on their rides business, and they're geographically located only in North America and nowhere else. So in this sense, I think that Uber has a network moat to itself, that Uber has actually become a verb now. So if you want to go somewhere, you just Uber there. Now let's see what are the major headwinds and obstacles in this sector. One of the major ones is that they rely on drivers, and they do not want that their drivers be treated as regular employees. And this has gotten them in trouble with regulatory work laws. For example, recently in California, they were being asked to treat their drivers as regular employees and give them regular employee benefits. But what was good for these companies was that this proposition was negated, and they continue to classify their drivers as contractors. So these are all the regulatory problems that they have not only come across in California, but across the world in different places. And another major problem with the sector is the autonomous robo-taxi network that is being planned. For example, Tesla is actually the biggest player in this field, and they plan to roll out their robo-taxis soon. And what that will do is basically a self-driving car will come, pick you up and drop you at a location where you want to go, meaning that there is no cost associated with the driver. And this is not possible with a business model like Uber or Lyft, where they have to spend money to pay the driver. But this automated robo-taxi model is far, far away from reality. As you can see, Elon Musk himself thinks that the regulatory approval for this is going to be a big unknown. And it's still not clear how Tesla believes that this technology and this service will be available to people rather soon. There are other players in this sector as well. For example, Google is trying to get into this as well, but Tesla claims to be far ahead of everyone else. So in my opinion, it is still going to take some time till this robo-taxi network is basically up and running and it gets regulatory approval. I myself believe that some of these big players, for example, Uber, is going to be profitable, and it will increase its revenue and it will expand as a business, even though it is facing a lot of competition. I myself actually invested in Uber and Lyft in the March lows of last year, and since then the stock prices have gone up quite significantly. But still, compared to other sectors, these sectors haven't taken off that massively. Here, if you look at price to sales for Uber, it is trading at 7 times price to sales, but if you look at Tesla, it is over 20. And some of these other hot sectors like the EV sector, the valuations are crazy high. I wouldn't invest in Uber at these prices, but if there is a general market pullback and the prices drop and it goes to somewhere like 45 or below, I'll be picking up some more shares at that price. So this finishes the analysis of the ride-sharing sector. I hope you enjoyed it, and if it was informative for you, please consider leaving a like and subscribe to this channel, Investing Untangled. I frequently post videos about stock analysis, sector analysis, and also educational videos about stock market investing. So please follow my content here, and I'll see you in my next video.